Hey everybody, Kyle Sasser here. It is everybody's favorite time of the month. That's right, market statistics time. These market statistics are for the Dayton metropolitan area for August 2023. So you might be asking yourself, we're in September, why are we looking at August numbers? And the answer is we can't really put the numbers together until the end of the month. and technically can't really put them together until 5 to 6 days after the end of the month. The reason why is some very particular MLS rules on when updates are allowed to happen. The 6th or 7th is usually the earliest that I could get these statistics in hand. After that, it does take us some time to record this video, edit this video, get it ready for publication. That is still a lot faster than the local MLS gets it out. The local MLS and also the state realtors body usually doesn't get these stats out until the 20th. So we can usually get these statistics out a couple weeks before the official state body releases its information. The other thing to know about this report is we are comparing year over year, not month to month. So we are comparing August 2023 numbers to August 2022 numbers. And the reason we do that is because there is a natural ebb and flow throughout the natural course of a calendar year where more homes will sell, less homes will sell, where more homes will sell and less homes will sell. Easiest example is school. August is pretty notorious for being a super slow month. So if you compare August to June or July, which are usually busier months, you're gonna have a bad time because it is not indicative of a change in the market. Now, obviously comparing year over year can be problematic because sometimes the market does shift in that period of time. So that's why context and this more lengthy report explanation is important because we do look at those keys. The overall trend for the last few years has basically been that things went crazy with COVID. Number of homes has been shrinking and was accelerated by the pandemic. Currently, we are at the lowest home inventory numbers pretty much ever. We had a little bit of a dead period in July 2022 to March 2023. So basically the second half of last year up until the beginning of this year, the market, home prices dropped. We were able to negotiate huge price reductions and lots of everything. When I reach out and say, hey, now is a great time to buy, like, I don't say that just to say that. I say that because the circumstances in the market are such that it is an actual good time to, like, the circumstances has changed. You know, the people that were willing to go and look at homes during that point in time were able to capitalize on that. Since then, since about March, a number of buyers has come back to the market, and we have seen increasing home prices because of that. The overall reason why, I will touch on in the analysis section after I go over the specific stats. There's a very clear reason why this is happening, why this has been happening, and why it's going to continue to be the case for the foreseeable future, meaning years, probably. It's not that that's bad news, it's information that you have to digest so that you can understand what is going on in the market. Whether you're buying or selling, like it's never an overwhelmingly great time to sell, it's never an overwhelmingly great time to buy. It's always going to be differing shades. There's always going to be hurdles and roadblocks and problems. It's just a question of, you know, which particular roadblocks are you going to be facing whenever you decide to make the decision to, you know, purchase a home or sell a home. And before you go, you know, accusing me of being super duper salesy, just know that I bought a house, you know, at the peak of the market last year at market interest rates. So again, there's always hurdles when buying something. There's no getting around that. For example, if everyone says, oh man, I wish that I would have bought a house back in like 2008 or 2009. Well, the reason you didn't buy a house back then is because a lot of the country was out of a job. Everyone was extraordinarily worried about the economy, and banks were not lending mortgages. You had to have such ridiculous credit and collateral to get a loan that most people could not qualify for a loan. And the reason why is because the banks were hoarding that money to, make sure that they survived. So when I say that there's hurdles and obstacles no matter what, it is the absolute truth. Now, if you remember back to math class, we have median and we have average. So average, that's the one everybody knows. You take price of 5 houses, you add it up, you divide it by 5, that gives you the average sales price. Median is a little bit different. With median sales price, so let's say you have 200 homes for sale. The median sales price is the point at which you have 100 homes at a higher price and 100 homes at a lesser price. The main difference is average home prices can swing relatively wildly if a larger number than usual of very expensive homes or very inexpensive homes sell. So like if 6 or 7 $50,000 homes sell during a given point in time, that can really pull that average down. Whereas the median sales price, because of the nature of being the midpoint of the market, doesn't tend to move as much based on the far highs and low ends of the market. It is more of a true midpoint of the market. If you would like your own copy of these reports so you can follow along, you can access that. There should be a link down below, either to the report page on our website or a link to the PDF of this report. It's about 13 pages, covers everything that I'm covering here today. All right, so let's dive into these Dayton market statistics. Now, I do need to tell you a little quirk for this month, and something I have tried to mitigate. Every kind of geographical region has their own realtor association, their own MLS. It is extraordinarily stupid. I wish NAR, National Association of Realtors, would just do a nationwide MLS. It's silly that I cannot easily send people listings in other geographic regions, but that is, realtor talk, not the way real estate should be. So far as the Dayton stats go, last month there was a major hack of a MLS service provider. So basically this is a company that provides a database of all of the home sales. Florida and Ohio MLSs that I'm a part of, they use Matrix. And honestly, way back in the day when I did support with GTE Enterprise Solutions and the first dial-in MLS, is a very similar system. So Cincinnati, which is just south of us here, their MLS uses a different provider and they got a ransomware attack. So basically somebody took their database, encrypted the entire thing so nobody could access it, and then demanded however millions of dollars in Bitcoin. Basically all listings and access to listings stopped in Cincinnati. Obviously Dayton, as the friendly neighbor, offered to let them list their listings in our MLS, which is entirely the right thing to do. The problem is it completely wrecked the statistics. So I'm actually curious to see what they release as their monthly statistics. I have tried to adjust my statistics to reflect what usually happens in the market. There's a bit of the overlap basically happens at like Hamilton. So Cincinnati stuff usually doesn't get listed on Dayton MLS. Dayton stuff usually does not get listed on Cincy MLS. Hamilton, which is closer to Cincy, gets listed more on the Cincinnati one, but there is a pretty significant number that gets listed on the Dayton MLS. So I have tried to adjust these numbers. If I was way off, I will retouch and correct that next month. But currently, this is what I got. Total number of closed sales, it was at 1,295, which is down 21.9% to 1,658. Oh, and just so you know, the total usually is about, like 60 to 100 transactions, listings, that sort of stuff. So it's not like this would be off like 700 homes or anything ridiculous. But I have tried to adjust for that 50 to 60 number, and I've also looked at historic trends just to see how previous years have gone and adjusted accordingly. Median sales price was up 13.7% to $233,000. That is up from $205,000. Average sales price is up 6.4% to $244,008, and that is up to $259,647. Dollar volume is down 16.9% from 405 million to 336 million. And median percent of original list price is holding steady at 100%. And I check that every month and it holds at 100%. Median time to contract is down 10.9% from 46 days to 41 days. Again, it pretty much holds around that 40, that 40 to 45, 46, 47 day mark. Total number of new listings is down 3.3% from 1,755 to 1,697. And active inventory is down 17.7% to 1,642 to 1,351. The thing I want to point out here is new listings is down, active listings is down, but remember so active listings was at 1,351, new listings was at 1,697, but our total closed sales was only 1,295. That means that month to month, we are still building inventory. So the numbers aren't quite as dire as they look here. And foreclosures and short sales, we are at a total of 17. Definitely not sky is falling material. Now, I do want to touch on some month-to-month numbers here because that does add some, I usually don't do month-to-months, but in this case, it does provide context on what the market has done the previous few months. So median sales price peaked at around 208, 210, if I remember correctly, in June 2022. That dropped all the way to $189,950 in January, and it has recovered. Last month it was actually higher, 40,000 basically, and currently it's at 233. So we can see that we have dropped and come back up. 1 month I never call a trend. Sometimes you'll just have a bounce. But yeah, currently median home price is up. So I do like to touch on the various price points because $1 million home usually sells in a little bit different time frame than a $300,000 home. Primary difference is there's a lot fewer buyers in that $1 million plus category. And I have sold both. I've sold $2 million homes. I've sold, what was that? I think the lowest I've ever sold was I've sold a $52,000 home, and I've sold a $42,000 mobile home. Mobile homes are way harder than $1 million homes to sell. 50,000 to 100,000, there was a total of 95 homes sold. That is 35% less than there was last year. 100 to 150,000 was down 37%, total of 153. 150 to 200,000 was down 30.2%, total of 245. 200 to 250,000 was down 14.2%, total of 188. 250 to 300,000 is down 6.1%, total of 184. 300 to 400,000 is down 7.5%, total of 221. 400 to 600,000 was down 16.2%, total of 140. And 600 to $1 million was down 23.3%, total of 33. Oh, $1 million or more, in case you're wondering, is down half, total of 2. Total number of new listings, we actually have a break at 250,000. So basically under 250, there's fewer and fewer homes being listed for sale. Above 250, there's more and more homes for sale. Usually this indicates that things are kind of sliding up into a new price bracket because we kind of have the telltale lower percentages on a couple of these. But I'll hit some of the high points here. So 100 to 150,000 was down 23.4% to 226. 200 to 250,000 was down 3.7% to 234 new listings. Again, that's kind of the indicator of the break point to me. 250 to 300,000 was down up 19.9% to 223. 300 to 400,000 was up 28.4% to 267. 400 to 600,000 is up 26.5% to 196. 600 to $1 million is up 61.5%, 63. And again, remember, median sales price currently is at 233,000, which is going to be in that 200 to 250 range. So those are the Dayton market statistics. So that's great, Kyle, you say. Those numbers are absolutely terrifying. How is median sales price going up when we're still building inventory? Shouldn't more supply mean lower home prices? Generally speaking, yes. Problem is real estate is very inelastic. Kind of going to pull back to a bird's eye view here of the situation. You've probably read stories about, private companies buying up a ton of new homes to rent them out. Probably also have read stories about Airbnbs, people buying all the single family homes up to set them up as Airbnbs. Those are aggravating factors. Those are not root causes. The root cause is after 2007. And I'll put a little chart up here so you can see. What happened is after the 2007, 2008 crash, builders got absolutely wrecked. So basically the number of new homes that were getting started dropped by 80%. They were, you'll see it in this chart here. So there is a precipitous drop after 2008, which you would expect. The thing of note is that look at how slow that recovery line is. And if we draw a line from where we're at now, you can see that we are really only building as many homes as we were in the early to mid 90s. But meanwhile, we do have millions more people in the country. So bird's eye view, it's not a demand problem. Demand has not changed that much. I have pulled numbers going all the way back to as far as I could go, which was like 2002. The number of homes selling has not changed that much, a few hundred plus or minus. What has changed is the number of homes that are for sale. They grew a huge amount after 2007, and then they have been, contracting more or less since then. Obviously, the last few years has been relatively acute. And even with interest rates, so at the time I'm recording this, interest rates are currently right at 7%. So the lowest I'm seeing is like FHA and VA loans, that are hanging around like 6.99%. Most conventional loans with 5% to 20% down is hanging around 7.25 to 7.5%. Even with that, the number of homes that are selling are holding relatively steady, but prices are still going up. So the problem is it's a supply problem. And the problem with a real estate supply problem is it takes forever for that to get solved. The best corollary I can kind of give you here is think of like the super hot kids toy at Christmas. Tickle Me Elmo, Cabbage Patch Kids. I'm sure I'm dating myself here with all these. I don't even know what the most recent one's been. Oh, PS5. Whenever this toy first gets released, you hit that first Christmas season, everybody loses their mind. And the problem is not the number of people buying. And yeah, there is like that initial rush sort of thing, but the solution is not to, scalpers, yes, they suck. But the solution is not to try to regulate that part of it. The solution comes when the factory starts cranking out a lot more of whatever it is. Like that is what solves a supply problem. And the issue with real estate is from the time a developer decides to build more houses, it is usually 3 to 5 years before those houses actually get built. They have to put the plan together. First of all, they have to find land, they have to negotiate a sales price. They then have to put together the site plan for it, get that run through the county planning, get that approved. Once that's approved, they have to lay down, groundwork. They have to put roads, utilities, those sorts of things in. And then at that point, they can finally build the model and start selling new homes. And then that's usually when the buyers come along. And from that point, it is, I've actually had some super fast new constructions recently, which is a little unique. On the short side, 3.5 to 4 months. On the long side, 8 months to a year is also not unusual. So if you're looking at new homes, which I am able to help you with, if you're looking at new homes, just know it's usually a 3 to 12 month process for those. But so you have that huge lead time. So even if last year every builder was like, holy cow, we need to build a ton more homes, they're not actually going to show up in the market for another year or two. So yeah, so we need more housing, we need more housing units. And I'm loath to say that because I, like many of you, don't really, suburban sprawl and all that stuff. Like I definitely like open land and forests and animals and, food. So I think that we should definitely need to go about that in a intelligent way instead of just, blasting houses out everywhere. But it's really a supply problem is what is going to get us out of this housing price crunch. And that's some of the bad news. So as far as like, is it a good time to sell or is it a good time to buy? It definitely a little bit in the seller's favor now. But honestly, if you're going to buy, like I said, I have bought a house in the last year at going market interest rates, and they were not great. I can tell you that much. But the important part on the buying side is you only have so many years on this planet, and you really need to live where it's going to make you happy. Now, you know, if you're situated somewhere that you're perfectly happy and content in for the next few years, perfect. If you are in a place and you have decided that you would maybe be happier in some other location, just pull the trigger, make the move. I promise you'll be happy with your move. I am absolutely thrilled with the home purchase that I made this year, even knowing where I'm at now. Now, if you're looking for like investments or stuff like that, that's a completely different discussion. And honestly, your home's technically a liability because it costs you money. But, you know, it is an asset. But thinking of it as an investment that should generate ROI that should be like your fourth criteria after, is it in an area that I want to live in and is it within my budget? The problem is homes that have a high return on investment are generally in locations that you're not really interested in living in. So I know we kind of got in the weeds there a little bit on kind of the big picture stuff. Honestly, it's going to be like this for a while. It's going to take a while to correct. And, you know, again, I wish I had the power to, you know, fix it, but, but I don't. So all I can do is just give you the honest information so you can make the best decisions for yourself. Generally speaking, it is still much, much, much better to purchase and own a house than it is to rent, primarily because when you rent, that money is gone. And with where rents are currently, that can be $48,000 in 2 years, relatively easily. Even if you can find like some place for like $1,200, like that's going to be $25,000 in 2 years. So, and that money is just gone. Yes, a home is definitely going to cost money. Interest rates are going to be high. There's some things that you can do depending upon what the market does to mitigate that. You can buy down the interest rate. You can refinance later on if interest rates go down. Unspoken thing is if you put a higher down payment down, say like 30-40%, you will actually get a much lower interest rate than the 30 or 20% down fixed stated that you see everywhere. So there's things that you can do, but it all starts with deciding to make that, you know, improvement in your life. It's relatively easy, but I can tell you that, you know, buyers are more picky now than they were in 2021 and 2022. You will still see sight unseen offers, but you really don't see offers where there's, you know, they're okay with no repairs or anything like that. We're kind of back to the point where the house needs to be in pretty good shape. It needs to be relatively modernized, or you will probably get some repair requests. That's just kind of the nature of things right now. That's how the market is. So I want to thank you so much for tuning in to these market statistics report. My name is Kyle Sasser. I'm with Kennedy St. Pete. I do these reports each and every month. Feel free to follow that link down below. You can subscribe and get an update whenever these videos are released. You can also download your own copy of this report at our website, ashlerre.com. We also have something kind of new, kind of cool. We have a customer portal that we have set up. So if you become a client of ours, all of your relevant information on, you know, how to buy a house, how to sell a house, pre-approval letters, contracts, surveys, all those sorts of documents that get spread everywhere to every corner of your email inbox are centrally located in one location. And we do that as a service to our clients. It's one of those things where I would get emails routinely from people, you know, 4 or 5 years ago. Hey, where's my survey? Do you have a copy of my survey? What was this on our inspection? And it wasn't that I was always happy to go back and find them because they're organized in, in my email inbox there. But I was like, hey, this is an opportunity to show how the way real estate should be. And I also have a background in IT and web development. So I was like, I will just build a website that people are able to log in and access all of their documents. So if you would like to experience the way real estate should be, you can reach out to me. Contact information is down below in the description. You can send me an email, kyle@ashlerre.com. You can also book a call via the link down below. And I promise I'm super friendly, always happy to talk with you, no matter where you're at in your home buying or home selling process. Even if you think you're like 2, 3, 4 years in the future, I can tell you my record is about 15 years. Somebody called me up, they're like, hey, I want to talk to you about buying a place, but I'm not really going to be buying for 15 years. So that's currently my record. So, worst case, if you're really far out, you will be my new record. But most people are usually, 6 months to a year or something like that. That is perfectly acceptable to reach out and have a conversation. My name is Kyle Sasser. Thank you so much for watching, and I'll talk to you soon.